Hi, this is Dr.S.VALLUVAN. This teaching video is about the topic business activities, that is classification of business activities from financial management. Now let's move to the topic. First, let's understand what is business activities. In the world of business studies, understanding the classification of business activities is essential for any aspiring entrepreneur or student. It provides fundamental framework for organizing, analyzing, and comprehending the diverse operations that companies in. The term business activities refers to any economic activity that is involved in the production of goods and services to meet the demands of customers and ensure profit through customer satisfaction, whether directly or indirectly. Typically, business activities are broken down into three categories. They are operating activities, investing activities, and financing activities. Let's see one by one. Operating activities are among the most important of a company's activities since they have a direct impact on its performance. Industry and commerce are two primary types of business activities. The manufacturing, processing, and distribution of goods is the primary focus of industries. Industrial enterprises refers to these categories of business. Manufacturing companies create both consumer item, and capital assets, while commerce encompasses all of the actions required to store and distribute commodities and services. In this context, commerce enterprises refers to such businesses. Banking, insurance, transportation, and warehousing are just a few of the services offered by the commercial organizations. It is very important for any kind of businesses to look after the three business activities. As I mentioned earlier, operating, investing, and financing. Actually, the foremost activities of the business is operating activities. What does it mean? These activities include many items from the income statement and the current portion of the balance sheet. For any kind of business, operating activity is very, very important. The line items, say for example the cash flow statement, the activities include many items from the income statement and the current portion of the balance sheet. The cash flow statement adds back the certain non-cash items such as depreciation and amortization. Then the changes in the balance sheet line items such as accounts receivable and accounts payable are either added or subtracted based on their previous impact on net income. Next one is investing activity. Business activities refers to the activities performed by the business. Investing activities originate when an entity engages in tasks like purchasing and selling of property, plant, and equipment. The investment activities section in the cash flow statement portray the cash flow and outflow during the specific period when the company engages in investment. The cash outflow commonly occurs due to the investing in fixed asset, and the inflows are obtained from the sale of fixed asset. For example, the investing section of the cash flow statement contains cash flow associated with the proceeds from the sale of property, plant, and equipment and purchase of property, plant, and equipment. So invest in long-term assets for business growth. So whatever the business spend their money to grow their business for long-term purposes. That is what we call business investment activities. Next, we move to financing activities. It is associated with the collection of funds for the business growth and attaining financial strength. These funds may be used for long-term projects or supporting daily operations like working capital. It portrays cash flow between business, investors and creditors. As a result, an entity financing activities through lights into a capital structure and the proportion of equity and debt used. Thank you.